Good evening, all. Ira Epstein, and here we are with your financial market wrap-up, and this wrap-up is for the evening of Thursday, the 18th of December, 2025, getting on to 6:50 p.m. Central Time, and I'm happy to say that my office today, we got all our computers hooked back up. Now, the green screen where I appear in it on these will probably take another couple of weeks, maybe the first of the year, as we still have to put that together and do other things with it, but it's right around the corner, that I can tell you, and I'm excited about all this. Maybe we'll even give it a bit of a new look. It's hard to tell. I want to remind you, if you need our free offers, I'll do this right now. You just go to iraepstein.com, free offers, they're there. You click any offer you want that comes through it. It'll put it into, for you, a folder. Then at the bottom, there'll be a scrolling page that you'll see. Move down there, put your name, your email address. If you have any comments for us, let us know, and we'll get everything out to you. There's quite a bit to choose from. You can move your cursor up here. You will be able to see that there's an icon. There'll be an icon over here if you're watching on YouTube as well, or you can just go to the website. Now, in terms of market action, take a look. You can see the stock indices are falling back a little bit tonight, and they were up and down like wildfire because there's a big battle going on. The battle is the data came out, and it certainly was friendly data. Is it real? Is the big question. And what I mean by that, the Bureau of Labor Statistics, as you know, was shut down during the government shutdown. And nobody talks about it. But where are we for the January potential of a shutdown? It looks to me like Congress has kicked the can down the road. And when they come back for the New Year's session, that is when they're going to take it up, because everybody right now is doing everything but talking about it. And there is no deal on anything. They're trying to get, as you know, healthcare passed first if they can do anything about that. Some help relief for lower income people. And I don't know where that's going to go. It's probably part of that whole negotiation. But when you look at what the Bureau had to do, they really took what November data they had because of when the government reopened in November and compared it to September data. You really have to get the whole month of December data to know just where these numbers really are. What's got skewed a lot was the cost of rents and living, your shelter costs, which makes up a big part of CPI. It's got a heavy weighting in it, and it went down more than most analysts thought it would go down. So they immediately said it's not a real number. So these are the things that you have to deal with in it. Now, tomorrow, we're going to get the University of Michigan final December Consumer Sentiment Index. That'll come out at 9. Existing home sales data for November. That will come out at 9. The Bank of Japan's going to introduce their monetary policy. It's widely expected that they're going to make the first increase in interest rates since I think it's January. So that could be it. The question is it one and done? And what the market will look at is, how does Ueda sound? So I'm talking the bank governor from the Bank of Japan. Does he sound dovish or hawkish? And that's what I think you're going to be betting on in the market once we see what goes on. It is widely expected that they will hike. The CPI numbers that came in lower than expected, I think I've done my best to explain that for you, and that's the problem with the data. So let's take a look now and see what we can do on the charts. As we look at the S&P 500 index, you're in a corrective mode right now. You're down for the week so far, almost a percentage point, with big support, I think, looking for the market at 6,700, about 75 points lower. When we look at the mini S&P 500 index, again, you still have the makings of some could call this a shoulder right through here. The other shoulder would be here, and the head is right through here. This is the head, a shoulder, and a shoulder. It could be that formation. To make it come true, you've got to get up and over this right through here, which is 69.88, and that would start what I'd call the real Santa rally. Now remember, Santa Claus rally is typically 4 days before, business days before Christmas, and the first couple of business days in January. So that's what the typical time frame is for the market. In the S&P 500, when I put the swing line study on, you have lower highs, lower lows. So while today's bounce is welcome, it did nothing to change that you're in an overall decline mode right now. You're under the 18-day average, so the bias of the market when you're under this is to the downside. The market did hit today the Bollinger Band, found its support there, and bounced off of it. If the market decides to break through it, the next support level is the 67.47 level, the 100-day average. And in momentum, you're oversold. So when I look at the chart, I say, okay, oversold in the market. It's already hit a Bollinger Band. The trend is down via this swing line. It's not a place that I'd be telling my clientele, hey, push your short positions, but it is also not a buy signal. In the NASDAQ, it's the same problem. You've fallen back now to the 100-day average and the Bollinger Band. Did it both the day before and today. And tonight you're getting a market that so far is just trying to be about unchanged, oversold in a downtrend. The strongest market, and I said it in this morning's morning flash, was I thought the pros were nibbling on the long side right here in the Dow. I thought they'd have stops under this low, and they're going to look to see can they get the market up here. That trade is still very much alive. When we take a look at the E-mini Russell, you've got a higher high and lower low. Same problem right through there. When we take a look at the DAX, we have been in a downtrend. You've lost the bullish. Now, let me say this right. In a downtrend on the swing line, you have lost the bullish embedded momentum. That often means before the market goes up for the most recent high to take it out, it makes a run to these moving averages. We'll see if we can get that done or not. In the 10-year notes, look what you rallied up to and you're stalling at, the 18-day average of closes. You can see the market never did what I call embed or lock in the momentum to the downside. It does what it so often does. It gets oversold and gives you a bounce, oversold and gives you a bounce. But the problem is that it's not changing what real rates are doing. There's a difference, though, of the 2-year. The 2-year ran all the way up today to the upper Bollinger Band. So I have been saying I think the pros are buying the 2, selling the 10. And, if you were just naked long, this is the profit objective in an overbought market. I'm not saying they came out of their spread, but I'm not surprised where the market stopped. In the dollar index, the battle is not over. This market is stuck at the 100-day average down to the lower Bollinger Band to get something going, and it could now because you had a bearish embedded reading and you lost it right through here as the market. You can see the latest readings, so you're no longer under 20 in these. It could go back to the 18-day average to regroup, which means the euro, which lost its bullish embedded slow stochastic reading, could correct back to the 100-day average to regroup there before it makes another new high or an attempt at it. I wouldn't give you 2 cents for the yen either way. Again, the market widely expects the rate hike. It's all about the wording. And does the bank governor make it sound like it's one and done or there's more to come? In Bitcoin, still dropping away. I had thought the market could get down towards the lower Bollinger Band. I think that I wasn't too far off, okay? I mean, give a little credit where credit's due there. And that doesn't mean it's out of the woods, but it doesn't have to go lower, is the point that I'm making. In the crude oil, I call this a bear market rally and really no more than that. We can fix this a little bit here maybe and get it to, there we go. And you can see what you're trying to do, though, should be fearful to those that are trying to be bullish. Day 1 of embedding, not here, right here. Today could be day 2, and then Monday can lock it up. It's getting a similar picture here in WTI. Notice how the trend is down. You're still absolutely hanging in there on the bear side. Heating oil is an embedded reading, rallies up to, there's a moving average I don't show you here where the sell points are, and I show that in my subscriber videos in the morning. And in the nat gas, you can see what's going on with lower highs, lower lows, and it's locked itself in. This whole move down was just unbelievable in its size and scope, and it just pulled the bottom out of the markets. So again, please remember, If you want to get any of our free offers, just move your cursor to the top up here. There'll be an icon that shows. You'll have one if you're watching me on YouTube over here. And you can always go to iraepstein.com, and that's the way to get it. In the meantime, I'm Ira Epstein. You have yourself a great evening, and I'll catch up with you in the other videos tonight or see you first thing in the morning flash update.